Welcome to The Explainer. Goldman Sachs just had their Q3 earnings call, and we're here to cut through all the jargon. We're going to give you the key takeaways straight from the CFO, Dennis Coleman, so you know exactly what went down. All right, so here's how we're going to break it all down. First, we'll hit the big headline numbers. Then, we'll dive into the firm's two main engines. That's global banking and markets and asset and wealth management. After that, we'll take a look at the company's overall financial health, and we'll wrap up with what the CFO sees coming down the pike.
All right, first up, let's look at the headlines. You can pretty much tell the whole story of Goldman's quarter with just three key numbers. Let's get into them.
First, the top line, net revenues. Goldman pulled in a whopping $15.2 billion. And to put that into perspective, this wasn't just good, it blew past a lot of what the analysts were expecting. So right off the bat, this was a really strong quarter.
So all that revenue, where does it end up? Well, it translates directly to the bottom line. We're talking earnings per share of $12.25. This is a number that investors live and die by. And yeah, Goldman definitely delivered.
And to wrap up the headlines, we have a return on equity of 14.2%. Now, if you're not familiar, ROE is basically a report card on how good a company is at making money with the money shareholders have invested. And let me tell you, 14.2%, that is a very, very solid grade.
Okay, so the big question is, where did all this cash come from? To figure that out, we've got to look under the hood at the firm's biggest division, global banking and markets. This is truly the engine room for Goldman. Get this one division brought in over $10 billion. That's like 2/3 of the entire firm's revenue for the quarter. So yeah, it's pretty clear this was the powerhouse behind these huge results.
Now here's where it gets really interesting. Let's break down those investment banking fees. I mean, sure, everything was up, but just look at advisory services. At $1.4 billion, it's not even close. It absolutely towered over everything else. A total standout.
Just how big of a standout was it? Well, advisory revenues were up an insane 60% from this time last year. A 60% jump. That is massive. So, what the heck happened? What drove that huge surge?
Well, according to the CFO, it all came down to a big spike in completed merger and acquisition deals. M&A. The whole industry has been a bit quiet on the deal-making front for a while, so this is a huge sign that the big, company-changing deals are officially back on the table.
And it doesn't look like this is a one-time thing either. The CFO made a point to say that their backlog, which is just their pipeline of deals they're working on, is the biggest it's been in 3 years. That's a really strong signal for what's coming next.
Okay, switching gears over to the market side of the business, the story is still really strong. FIC, that stands for Fixed Income, Currencies, and Commodities, was up a solid 17%. But then you look at equities, and they posted even bigger numbers. And that was mostly because their financing division had a record quarter. That's the part of the business that lends to big clients like hedge funds. That performance really helped make up for some softer spots.
All right, let's move on to the other big piece of the puzzle, asset and wealth management. Now, if global banking and markets is all about hitting home runs, this division is about consistently getting on base. It's all about that long-term, steady, durable growth. And boy, are they growing. The firm just hit a brand new record. They now have a staggering $3.5 trillion in assets under supervision. I mean, that number is just enormous, and it really speaks to how much trust clients have in them.
But you know what's maybe even more impressive? The consistency. This was the 31st quarter in a row, we're talking almost 8 years, where more client money came in the door than went out. That just shows you this isn't a fluke. It's a steady, reliable machine.
And check this out. It's a clear sign that people are hungry for their more complex investment ideas. The firm raised a record $33 billion for what they call alternatives in just this one quarter. We're talking about things like private equity and private credit, stuff that's getting a ton of attention from investors who are trying to find better returns right now.
Okay, so we've looked at the individual divisions. Now let's pull back and look at the big picture, the financial health of the whole firm. Because, none of this happens without a really strong foundation.
This here is like a quick financial checkup. Net interest income, so the money they make from lending, was a solid $3.9 billion. They set aside $339 million for potential credit losses, which is pretty well managed. And yeah, operating expenses were up, but that's mostly because they were doing so many deals, and that's what you'd call a high-quality problem.
So after all that, what does this mean for the people who actually own the stock? Well, the firm didn't just talk the talk. They returned $3.3 billion directly to their shareholders this quarter alone.
And here's how that breaks down. The bigger chunk,
$2 billion was used for stock buybacks. That helps boost the value of the shares that are still out there. And the other $1.3 billion? That was paid out straight up as dividends.
All right, let's wrap this up by looking at the CFO's outlook, his take on what's coming next. Because after a quarter this good, everyone immediately wants to know, can they keep it going?
And the short answer is, he's very confident. He pointed to that huge M&A pipeline we talked about, the steady growth in asset and wealth management, and even a new push to use AI to make their own operations more efficient. He also mentioned that the regulatory environment is looking better, which lets them, in his words, play on offense.
So, his final message was basically one of total confidence. He really connected the dots between their great performance this quarter and his belief that they can keep delivering that same kind of value for shareholders down the road.
So yeah, this was obviously a fantastic quarter for Goldman. But when you look at those forward-looking signs, that record pipeline for deals, the new focus on AI, it makes you wonder, is the real story here not just about this quarter, but about the stage being set for an even bigger 2026? Something to think about. That's all for this explainer.